Welcome to Lesson 6 for our accounting class ACC304. For this lesson, we are instructed to read chapters 16, 17, and 18. These are to be found on pages 105 and 106 of the text. In addition, we will examine chapter 20 to be able to answer the discussion question number 1. There may be additional readings suggested later from the same part of the text. Chapter 16, Rule 102, states simply that the auditor member shall be free of conflicts of interest and shall not knowingly misrepresent facts or subordinate judgment to others. Subordinate means accept the judgment of others over your own. These are described as the virtues of integrity and objectivity, virtues worth having. Chapter 17, Rule 201, lists and briefly describes 4 general standards for the CPA as follows. Number 1, professional competence, know what you're doing. Number 2, do professional care, do the work. Number 3, adequate planning and supervision. This, of course, is the primary responsibility of the lead auditor. And finally, number 4, sufficient relevant data. So it has to meet statistical standards of completeness and appropriateness. Chapter 18, Rule 203 states that all departures from principles should be based on either new laws or a new form of business transaction. As far as departure from principle for already established rules and practices, this would say by default, don't do it. Chapter 19, Rule 301, states that the confidential information will be disclosed only with the consent of the client, subject to these 4 exceptions. Number 1 is peer review. This, of course, would be reviewed with agents not on the case because they are judging the acceptability of the practices and would have to see that information. Number 2, sale or merger of the accounting practice. And one company buys another, they will get access to this information, but they must disclose it only with the consent of the client. Remember that. And as long as the purchaser does not disclose the information during the sale or merger, they're fine. Number 3 is under court order. We say subpoena means under penalty of the court, and the courts, of course, command the police. So one usually does what the court orders, lest one be arrested. And number 4, only disclose under a third-party signed agreement to preserve confidentiality, together with appropriate controls to prevent unauthorized disclosure. Those controls have to be very carefully looked at because it's very easy to ignore them, as witness what goes on in the U.S. Congress on a daily basis. Leak, leak, leak. Chapter 20, Rule 501, lists acts that are discreditable to the profession, that in other words reflect badly on everybody, so don't do them. Number 1 of 4, client provided records should always be returned to the client upon request. After all, they are the client's records. Records may be withheld if the engagement is incomplete or if payment for services has not been made. Number 3, working papers, not client records, but working papers are the property of the audit firm, unless the law specifically states otherwise, which may be true in some government issues. Number 4, the CPA code generally requires the return of all loaned documents to either side. This is only reasonable and just. The last 2 discussion questions we'll take up in a moment and are of a more general nature than these specific rules, rules 102, 201, 203. After completing the lesson, you should understand what the professional attitude should be, and that is always one of independence, essentially. Second learning objective, enhance the stature of the profession, and one does that by behaving in a professional manner showing objectivity and competence. And finally, understand the effect of derivative instruments and hedging activities. Derivative instruments and hedging activities are generally investment contracts of various sorts, and we'll take a brief tour of that during class. This video is not the appropriate time for that. Okay, you should bring the textbook pages with you. There's only, I believe, 2 pages there, and possibly a third. Our discussion questions include the following. Number 1, discuss discreditable acts, and we have already taken a look at that in the rules that we read. Number 2, discuss the duties of public services and fiduciary duty to the public. Again, part of the professional creditable behavior of the CPA auditor is to take primary care of their duties to the public. That is, to protect them from loss by pointing up incorrect practices or even dishonest practices on the part of the client firm. So public over the client would be something we would discuss here. Number 3, discuss matters to be disclosed to the client, and that would be virtually everything, especially if you're going to give them a bad rating. And number 4, discuss that a member accept a commission for the sale of a life insurance policy. If the agent sells a life insurance policy, can they collect a commission? Well, we would want to determine, first of all, whether that insurance policy was purchased by a client or a non-client. In the event of a non-client, it's a non-issue. In the event of a client, it is an issue, and we would want to know the amounts and relative to the other services being provided. That pretty much does it. We'll look forward to seeing you in class this evening.